All right, so today I wanted to go through the steps to reading a prospectus. Most of us start investing through whether IPOs or APOs. You might have heard about rights issues, stock splits, etc. All of these opportunities to invest are going to start with a prospectus. Some company trying to raise capital or are trying to expand or grow their business, they're going to prepare a prospectus. They're going to release that to the public, investors read it, and then make a decision as to whether or not they want to invest. I'm going to go through the steps of reading a prospectus, what key things to look for, the key things I look for before I make an investment decision. And this is really meant for beginners, persons who've maybe never read a prospectus before. Maybe they feel a little bit intimidated by it and they're not sure where to begin. So I'm going to try to explain this in 15 to 20 minutes. So it won't take long. And just so you have an understanding of how you can approach it so that the next prospectus that comes out, you're not intimidated to go through it. So hopefully that sets the expectation for this video, right? So I'm Jermaine, co-founder of L.E.A.R.N Invest, and I'm also community manager. So we're doing this video really and other videos like this on this channel to help you learn how to invest, right? So that's what we do. That's what we're about. So if you're new here, be sure to subscribe, like this video if you find value in it, and let's get started, right? So the first thing I'm going to ask you, if you're not a new investor, just in case, what's the thing that you look for when you're reviewing an IPO, right? What's that one key thing you look for? Is it use of funds? Is it the company you're looking at? Is it some key person you're looking at? Maybe there's something specific that you want to see. Tell me in the chat now if you're live, or tell me in the comments if you're watching this on a replay, what you're looking for first, all right? I'll tell you what I look for at the end. So tell me what you look for now, and I'll get started. So also a quick call to action here. Be sure to join our Learn, Grow, Invest community. We have a lot of things we're working on that I think you're going to be excited about very soon. Hopefully you're registered for our conference already. If you're not familiar with our conference, be sure to check the links in our bio or on our website. You'll see the link to register for the conference. It's completely free. You can join our conference, learn how to invest, learn how to manage your money. It's November 22nd. It's a full day conference, so be sure to register now so that you can join us there. Also, be sure to jump into our community. We have a whole, group of investors there to help you, make the investment journey easier. All right, so here's how I'm going to break down this video. All right, trying to keep it very simple here. We're going to talk about why read the prospectus. That's the very first thing I'm going to talk about. So I'm going to introduce it as if it's brand new. Then I'm going to talk about the structure. Now, every single prospectus is different. I've seen different things for each prospectus, really. Then I'm going to talk about how to assess it before investing, right? So just some of the basic things to look for. I mean, each company is going to be different, but there are some questions that you should ask, right? Then we're going to talk about common red flags, right? What are some things where if you see it in the prospectus, you should pause and say, well, maybe I should either ask some questions or maybe this investment is not for me. And then finally, I'll share my shortcut or the way in which I read a prospectus, because there's a very specific order in which I read it so that I may not have to read the entire prospectus just in case it doesn't pass that quick test for me, right? So that's what I'm going to jump into. Let's get started, right? So the first and obvious question, why read the prospectus? So the prospectus is essentially a legal document. Companies are required to release it, especially for IPOs, APOs, etc. It's information about the investment offering. It's information about the company. It's information that is relevant to you being able to make a decision about that investment. It feels very large at times. It feels very heavy. I've seen some prospectus, maybe 200 odd pages. So it's a lot to read. But for the most part, it's really there to arm you, the investor, with the information you need to make an investment decision. And it is a legal requirement for companies to do this. So the first time a company raises funds publicly, that's called an initial public offer. So you'll see an IPO prospectus, right? That's the very first time. The next one, so the second time they come to market, they may issue an IPO. It could be a rights issue. It could be maybe debt they're raising in terms of like a bond or something like that. They may issue, preference shares. So they may come to the market a second time after that initial offer. Any way you take it, they're gonna release a prospectus for you to review, because that's what's gonna tell you about the offer. So all market offers will have a prospectus, right? You may not have read it, but it's there, right? So for the most recent ones, those should be easy to find. I do find that some of the older ones are a little bit harder to find. Those companies that have been listed maybe 8, 9, 10 years on the JSE, those are a little bit hard to find for me. Some of them can be found because some companies host it on their website or stuff like that. But you should be able to get that information from the JSE, I think, if you email them. But sometimes I'll try and do a web search. I don't always find what I'm looking for. So here's, some quick things. You want to avoid hype. Focus on the facts, right? What is the prospectus saying? So there's this thing that we have in Jamaica called the IPO pop, right? So sometimes persons expect that when an IPO comes out, it's supposed to give you this initial pop or run up after the company lists for the first couple of days. You want to, not that you avoid those, but you want to be mindful of that, meaning you should measure the performance of an IPO, I think, due to, I would say, the first, I measure it in 3 stages. I measure whether or not the offer is successful. I measure the 1-year performance, I measure the medium-term performance, and I measure the long-term performance, like 5 or more years, right? Those are the stages that I look at, because you can't say the IPO was good or bad just based on the first few months, because some companies start out slow and then they do really well afterwards, right? So you want to avoid hype. There's positive hype, meaning there's a company that does really well, investors are bullish about it, they love it. But there are also some companies that have hype but no substance, right? So that's more of what I'm saying here. You want to remove emotional investing. So you don't want to be investing because you like the company, is for lack of a better phrase, right? So that's what I say to our investors in our monthly program. Don't just say you're going to invest in it because you like it, right? So give me something more than that. Focus on other things. So you want to remove the emotional investing. We're dealing with money. We're dealing with something that impacts your life, your livelihood. So you want to remove the emotion out of it. And you really want to take the time to understand the business, right? Understanding the business is important. You want to know how they make money. You want to know who they're serving. You want to know how they're going to grow the business. All of those things are important. So that's just why you should read the prospectus. Next, we're going to talk about the structure, right? So each prospectus is different. There are some things that are common. So I'll go through the ones that I believe that you're going to see for every single prospectus. There are some that are highlighted in yellow here that you may or may not see, or you may see it labeled a different way. So for example, you're going to see something likely on corporate governance. You're going to see some appendices, some audited financials as well. But the how to apply may not be in the prospectus document. It may come as a separate attachment. Most cases it's included now, and the pre-IPO transactions really just depends on what might have taken place before the company is issuing that prospectus. So that's why those are highlighted in yellow. They may or may not be there. They may be called something else. That's the kind of thing. The ones that are highlighted in green, we're going to go through that in terms of just talking about briefly what's covered in each section, and then what you can sort of expect to see and why that area is going to be important, right? So on the left here, we have the RPL, Regency Petroleum, invitation for subscription. So they came to market in November 2022. They were seeking to issue 287 million ordinary shares. They had it being offered for $1 per share, and these were the different sort of buckets for the offer, right? So this is just a quick overview. This would be included in either the offer details or invitation summary or anything like that, right? So that's where you'd normally see that information. All right, so we'll start with the company overview, especially if this is a company you've never heard about before. You really want to start by reading the company overview, right? So what does the company do? How do they make money? What are their products and services? Where are they positioned in terms of the market, right? Are they poised to grow? Are they in a really competitive market? Usually, if a company is not running a monopoly, they will be facing some competition, but are they close to market leader? Can they become a market leader? Do they have some sort of competitive advantage that will help them be able to grow their business? Things like that you want to look for. Why this matters? It helps you to understand the business model. It helps you to understand why you should invest. It helps you to understand how they make money, what seasonalities may be there, what risks may be there. So it helps you to understand what you're investing in. It helps you to see how the company might have evolved over the years, right? They may have started in one case. So for example, RPL started with mainly LPG, and now they've branched out into having, petroleum stations. So things like that, right? You really want to understand as well where they're coming from and see if you can get a vision or a picture as to where they're going, all right? Next, we want to look at the offer details. This is like the meat of the prospectus, right? Every single prospectus is going to have an offer detail, right? So this is the offer that the company is making to its investors or potential investors. It will have some key dates, the number of shares on offer, the share price, terms and conditions of the offer, and things like that, right? Why does this matter? It will tell you how many shares are available in the public or reserved pool. Usually you want to look at this to see how the shares will be distributed. You'll see important dates or milestones, opening date, closing date, basis of allotment date, things like that, listing date, all of those things. And it will tell you its terms in terms of share allocation. So just in case it's oversubscribed, how the shares will be allocated, what's your basis of allotment approach, things like that, right? So that's what this section is for. And next, the third, possibly one of the most important areas, I would say, is the use of proceeds, right? Why are they raising this money, right? What are they going to do with your investment, right? So where the money raised will be directed, whether it's debt that they're clearing, whether they're expanding, are they going to acquire another company? Is it an exit for a shareholder or a partial exit or something? This will tell you, and each investor will have their preference. So it's up to you whether or not these things are good or bad for you. I will be raising one of these things as a potential red flag. So definitely stick around for that portion of the video. But I'll talk about some potential red flags here depending on the use of proceeds, why this matters, what's the company's strategy for growth, because they're likely raising capital for some growth strategy. So what is that strategy, right? Are they clearing debt so that they can grow and realize more profit and margins? Are they expanding into new regions or creating new product lines? Are they going for inorganic growth by acquiring another company? Or is it that a large shareholder is just making some of their shares available so that the company can list and get more exposure and awareness for the brand, right? This, though, is one of those areas that you want to look at to see if there are any potential red flags. And as I said, I'll talk about the red flags later on. Next part, one of the areas that some persons shy away from, I've found, because the numbers can be intimidating for some, is the financial statements and the MD&A. I know it feels like it's a lot of words, a lot of numbers. This area is focused on the revenues, profits, cash flows. So there are three key financial statements that you'll usually see there. It's a profit and loss, cash flow statement or statement of cash flows, and statement of financial position or balance sheet. Extremely important to go through. You always want to read this in the prospectus, and then the MD&A is simply the commentary on the financial statements, right? So the MD&A is going to give you the management's view of their own performance, right? So they're going to comment on it. share insights for it, the reasons why they would have performed in the way that they have. Why is this important? You want to see if the company is profitable or not. You really want to know what you're investing in. This speaks to the quality of the investment, right? What are some key ratios here? Are the ratios good or bad? So some companies will include the ratios in the prospectus, some don't. So some of them you have to calculate the ratios. Some of them include it. I always like when companies include the ratios so that I don't have to do that step myself. But then, of course, sometimes when I have it, I'll typically double check anyway, right? So because the ratios aren't always correct, right? So you want to double check. And then the question that I'm really asking from this section is, are they positioned for growth? What do I mean by that? Are their debts decreasing? Are their revenues increasing? Are their profits increasing? Do they have good management of cash? Is their operating cash positive? Do I see trouble with a business model where there are signs of potential issues? Are their admin costs really high, right? I remember one company that listed, I noted that their admin costs were pretty high right in their IPO prospectus. And it actually turned out to be an issue later on for that company, right? So things like that can tell you or show you signs of where the company is headed. So those are things you want to look for from this section here. And then if you know me, you're gonna know that I'm interested in this area. That's a dividend policy, right? So what's a company's policy relating to payment of dividends, right? This is gonna be important because is a company intending to pay dividends? So here's the thing. If it's a main market company, a large cap company, they should be stable enough to have to pay a dividends. If it's a growth company, meaning a junior market company, they may say, well, we're not going to pay any dividends in the short term, and we want to focus on growing the business. Or they may take a conservative approach and say 25% of profits will be paid in dividends. Either way, you want to know what their plan is, right? So does a company plan to pay dividends or reinvest profits? It's going to be important so you can align your expectations. All right. So if you are investing for income, meaning you're a dividend investor, and the company's dividend policy is that they're not going to pay any, then that may not be the right investment for you, right? If you're looking for capital gains, meaning you're looking for a growth stock, then you may want to say, well, yes, you're going to reinvest that capital to grow the business because you want to see more profits, because that's what you're looking for to be able to see the company grow, all right? And then finally here, risk factors. This is one of those areas I must admit. And let me shift the view here. I did not always read this area, right? I was like, it seemed generic to me at the time. It seemed like they were just kind of listing some things, but it's very important to understand the potential risk facing the company that is making the offer. Why this matters, it gives you awareness as to the exposure of the company, right? What are the risks that are facing it? And especially in a post-Melissa era, you really want to understand this, right? Is there a concentration risk? And that's where the company may be concentrated into a certain number of clients, or maybe they have one large client. Is it that their portfolio is not spread out enough? Like different things here. Is there market risk? Is there foreign exchange risk? Is there some compliance risk? Like there's so many different things to factor here. And this section is usually maybe 2 to 3 pages long. You want to at least go through it. I usually look for the uncommon ones, right? The ones that I don't normally see. Read through them, try to get an understanding as to the risk facing the company. And that's because there is no risk-free investment. So you always want to think about the risk. All right. So before I get into the how to assess it before investing, let me see if we have any questions or comments here. So this is not really related to this topic, so I'll answer this at the end. But it's noted. I'm going to start it here. Kirk, is saying the recent movement shows me that retail is getting more aware of the market, but I would say there is still a knowledge gap. Is this relating to the market offers, Kirk? Let me know. I'm going to start that as well to get back to it. And Anisha is saying good stuff. All right, cool. Thank you for that. And everybody else was just asking me what time I'm going to start the stream. All right, so let me get back into it here. So the first thing that you want to ask, right? And I want you to pause here. So remember, we spoke about not giving into hype, not making the emotional investing. You really want to stop and ask, does this company fit in my portfolio, right? You want to ask this question honestly. Not every investment is going to be for you. So if the IPO does not fit in your portfolio, then it may not be the best investment decision. Now, here's the thing. And I'll say this to some persons, right? Just because you don't invest in the initial IPO doesn't mean you don't invest in the company in the medium term or the long term. The IPO itself may not fit in your current portfolio or investment strategy, but later on you may choose to take a position because some things would have changed. A lot of persons, for example, might have stayed away from Atlantic Hardware when the IPO just came out. And recently we saw where a lot of investors were interested in purchasing the company post Melissa because maybe they thought there were some opportunities there, right? So you may feel one way about the company at IPO and feel a different way later on if the circumstances or environment that's around that company changes. All right, so something to bear in mind here. And on that note, I wanted to do a quick plug here, just a quick 30 seconds to talk about our Portfolio Makeover Challenge. It's our challenge to help you know. So the question that I just asked, does this company fit into your portfolio? This challenge will help you to answer that question, right? So we'll talk about portfolio growth strategies, how to assess your portfolio, just in case you don't know how to pick stocks, how to rebalance, when to buy, when to sell, the age-old question that every single investor would like to know. And we're also going to do live portfolio reviews. What does this mean? You share your portfolio, we block out your name, and using what we learn in the challenge, we'll evaluate that portfolio together as if we're all doing a group analysis on that portfolio, right? So it's a 3-day challenge. It's on November 26th to 28th, 2025. So sign up. The link is in the description, or use our link tree for that link. And we'll have one every few months, but this is the last one for 2025. So you really want to get a handle on your portfolio before we start the new year, because of course the variables that are going to affect your portfolio will be different going into next year. So now is the time to do it. All right. So let's move on to the next part on how to assess the prospectus, how to assess it before investing. You want to look at how much this company is similar to other companies in the same sector. Now, I'm thinking about a company like TransJamaica, where you may not be able to assess that company, right? There was no other company that was like that was listed. In those cases, you may not be able to. Sometimes it may make sense to compare with companies outside the country. In other cases, like you have a Dollar Financial, you may want to compare with Access. If you have an Image Plus, you want to compare with maybe an Elite Diagnostic, and an RPL with a FESCO. Like if you have similar companies in the same sector, you can do a comparison, but bear in mind that you want to understand the stage that company is at, right? So for example, if you were to compare an RPL with a FESCO, there are two different stages, right? FESCO is a little bit further along. RPL would have been just starting in terms of their footprint, the number of stations, things like that, right? So compare in a practical and objective way. So you want to ask yourself as well, is the company fairly valued based on the offer price? Now, we've seen in our market a sort of standard offer price of $1. We have seen IPOs in the past for like $2 in terms of Image Plus, or I think the Lab, when they came out, were about $2 and change. I think the VMIL IPO, the first one that I've ever invested in, was about $2.33. So we've seen different prices, but it's typically common to see a $1 offer price. But the question is that a fair price? Even though it's $1, even though the nominal price is $1, is that a fair price for the company as currently valued, right? So that's a question that you need to ask. If you're not sure how to value companies, then typically brokers will release what's called oh my gosh, I'm drawing a blank here. They usually will review their analysis of the company, so they may share a valuation that they think are a fair price for that company, right? The term in my head is coming up: do not participate. So a broker may say whether or not you should or shouldn't participate in the offer. That's usually focused on their clients. It may not speak to you specifically. So multiple brokers may release a review. Sometimes they don't release a review. I've seen situations where some brokers don't release anything at all. It doesn't make sense to me, right? I think every offer should be reviewed, but in some cases they may choose not to. And the final question here that you want to ask yourself is, what is the opportunity cost, right? So if you're going to go for that IPO or go for that APO or go for that rights issue or go for that other investment, is it taking you away from another investment opportunity, right? What is that opportunity cost? Is it worth it to keep your existing portfolio and not doing it? Or is it worth it to maybe take some profit or rebalance or do something to take advantage of the opportunity? Maybe it is compelling enough for you to take advantage of. It's a personal decision though, right? But what is the opportunity cost is what you want to ask yourself here. All right. So I'm going to get into some common red flags here. This does not apply to every single company in every single situation. It really depends, right? And different things may trigger a red flag for me. It really depends on some things. So right off the bat, I'll say I'm looking at the quality of the company. Well, I have some things here, so I'll go through it first and then I'll talk about it in general, right? So here are some questions to ask. Are the projections realistic or too optimistic? Again, I remember prospectuses that I've seen where business is gonna double or triple or quadruple in 2 years, 3 years, etc. I'm always gonna question, are those projections realistic or not? Right? Now I think you should always do projections, right? That's the thing, right? I think a company should do projections. I think they should let us know where they're planning to go. But then the question is, are those projections realistic, right? Because I want to know how well management can predict the growth of their business, right? So I do want to see projections, but at the same time, if they're kind of committing or promising massive growth, is that realistic based on the current climate, based on the industry, based on the business model, etc.? Next red flag to think about, are the fundamentals of the company strong, right? And fundamentals for me are the entire picture, right? So no one thing is going to stand out for me, but personally, I'm looking at profitability. I'm looking at cash flow. I'm looking at strength of the balance sheet. I'm looking at growth potential, right? Because a company may start small because they're raising capital for growth, right? So if it's an IPO, are they going to, so let's take Dollar Financial's case, they're able to grow the business so quickly in just 3 short years, right? So that's an example of a company with massive growth potential. RPL is another example, massive growth potential, things like that, right? So the fundamentals is really to show you that the company has legs to stand on so that they can grow from, all right? Next thing here, do you understand the business model? If you don't understand the business model, then that is actually a potential red flag, because it may be too complex. It may not have been easily explained. It might not have been clearly explained. And so is that something that you should stay away from? Because if you don't understand the business, then you won't know whether or not you're making a good investment decision or not. All right. The next thing here are the use of funds clear, right? So has a company been clear as to how they're going to use your money? It has to be clear, right? And this is the part where I was going to say earlier, where some investors say they shy away from companies that are raising funds to clear debt. I personally don't necessarily have an issue with that, because on one side, when you clear debt, you realize more profits and cash flow because now the debt is cleared. So you'd have pretty much exchanged debt for equity. There's nothing wrong with that. It really depends now on, now that that debt is cleared, is the company going to be growing, right? Is that growth going to be tangible? Is that growth going to be meaningful, right? Next question here, do you trust the leadership? You may or may not know the leadership if it's a new company, but you know, what's the board like? Is it somebody who has, and this is where you want us to watch those initial interviews, right? Because most IPOs or APOs, etc., there'll be an investor briefing, maybe around the interviews. Can you trust the leadership of that company? You know, different things like that. And then finally, is the growth plan clear, right? Do you know how are they going to go from IPO or APO to the next 12 months, to the next 3 years, to the next 5 years, to the next, well, maybe you can go past 5 years, right? But I remember Tropical CEO would say to us that, for example, they have plans of listing in a couple of years. And, you know, we've seen where they've done, you know, the acquisition of Rose Batteries. And so they've started to prepare themselves for possibly listing on the NASDAQ. So they've shared their growth plan. They've taken steps to get to that plan. And so the growth plan, or at least that strategy, is clear. Now, the execution is another story. You have to kind of watch to see how the company does that. But at the very least, you want us to ask yourself this question. These 6 questions, to me, if they're not answered in the right way, can be potential red flags. All right. So here is my shortcut. I'm going to share with you how I look at a prospectus, right? So when I get that prospectus, I'm going to some very key areas first. I'm not trying to read everything. These are the things that I'm looking for. So the very first thing, I read the invitation summary first, right? What's being offered, how many shares, what price, you know, use of proceeds, very high level. I want to see what the summary is, right? Then if I'm interested, I go to the company overview. If it's a brand new company, if I'm already familiar with the company, I may or may not read this, but it's always good just in case it fills any gaps in my own knowledge. And then I'm going straight to the MD&A, right? So I'm not even necessarily reading the financial statements yet, because the MD&A should include information from the statements anyway. So I can read the MD&A and get insights into the financial statements right away. If it checks that box, meaning I understand the business model, I know the company, I trust the company, then I read the MD&A. If all signs are a go, then I'm gonna go through watching the interviews, reading, looking for the broker analysis, etc. If I'm not impressed by the first 2 steps, I may or may not watch the interview. I may or may not look out for any broker analysis. I may, in my head, just write off that company, right? And that's the truth, right? Because it has to pass my personal test as to what I'm looking for, especially things like maybe, you know, how are they going to grow? Are the use of funds clear? Things like that, right? So I have to understand and be clear on those things. So these are the things that I do, right? So this will give me a good high-level overview of the company. And if I'm interested now and I want to make an investment decision, that's when I'll read the full prospectus. I do not read the full prospectus until I am sure that I want to invest, right? So hopefully this makes sense. I read the summary first. I read the overview, read the MD&A. I'll watch the interviews or look for some broker analysis. Then if I feel like, okay, I want to put my money in it, that's when I'll read the full prospectus, because I don't want to put my money in it unless I read the full prospectus, right? Hopefully that makes sense. All right. So that is kind of it, right? So what I'm going to do now is first I'm going to look to see if you have any questions. And then we're going to do just a quick little look at the most recent IPO, right? So the most recent IPO on the Jamaica Stock Exchange has been Atlantic Hardware. So we're going to look at that prospectus very, very briefly, like 5 to 10 minutes max. We're going to look at how the company has been trading, and then we'll wrap up this video. All right. So I see Richard is asking, how do I know if the company is paying dividends or is a capital gains company? Look at the dividend policy, right? So Richard, you want to, if the company's dividend policy will tell you, every prospectus, I don't think I've seen one without a dividend policy. If you don't see it, you can ask them at their investor briefing. So if they don't plan to pay dividends, I'm expecting that it should be a growth company, because if it's a more mature company, then they should be generating enough cash to be able to pay the dividend. If they're not paying a dividend, they're not generating enough cash. I don't know if, I mean, where would they fit really? Because if the company is not growing, the question is what will investors be looking for, right? So that would be what I'm looking for there. Hopefully that answers the question. Kurt Gibson says, emotions is a uphill battle for me sometime, but a framework helps a lot. That's what we have, Kirk. So we have a framework. Certainly, you know, we have a framework, right? I shared one here tonight. You can go through if you're reading the prospectus. We typically have a prospectus review as well. We also try to interview the company where possible. We don't always get an interview, but we certainly try to get one. In terms of, we'll always reach out to the company and ask. Sometimes they'll grant us, sometimes they won't. I remember trying to reach out to Atlantic Hardware, reached out to JMB, tried to reach out to the company, sent an email, no response. So, and that's okay, right? The company usually chooses what mediums they want to go on, whether it's taking stock or maybe some other program they're choosing to commit their time to. That's okay, right? We're relatively, not necessarily it's small, but we're certainly smaller than Kalila. So some companies may choose to go on her platform and not look at a small Learn, Grow, Invest, and that's okay, right? So we focus on doing the prospectus review, which I think is what's gonna tell you whether or not you should make an investment decision or not. That's why we do it, to help you to do that. And then, of course, the company may do their own investor briefing or other things like that. But certainly, we'll always offer the company the opportunity. They may or may not take it. All right. So let's jump into this prospectus review here. Well, just a quick one, right? So we have about 20 minutes to go before the stream is over. I'm going to try to do this in 10 to 15 minutes max, just to show you some of the things that I would have mentioned before. So we have Atlantic Hardware here. So the company would have IPO'd earlier this year. So I think it was earlier, back in May. And we're seeing here where for most, so they barely scratched over $1 when they first listed. And for the last 6 months, they were under $1. And then just post Melissa. So you have to ask yourself the question, right? If Melissa did not happen, would Atlantic be over $1 right now? Right? So persons who would have invested in Atlantic's IPO would have been in a loss position, unless of course you bought somewhere near here and maybe you sold somewhere near here, but you would have been down maybe 5 to 10%, because I think it was hovering around 90 cents thereabout, right before Melissa. But at the very least, this has been its performance for the last 6 months. This is their IPO prospectus that they would have released. And so let us have a look as to what that looks like here. Let me see if I can find it. Here we go. Did I not do that correctly? Okay. So we have here the table of contents. I'm going to start here to just show you that there are some things that are different. So for example, I did mention disclaimers. Sometimes that's there. There's typically a definitions section to explain some key terms. Usually the CEO or the chairman or somebody writes a letter to prospective investors. We spoke about the summary of the offer. We spoke about risk. They usually have a note on forward-looking statements. They usually have, something about the invitation, use of proceeds, dividend policy, information about the company, management or board of directors. I didn't mention that section, but that's usually there as well. We have related party transactions. So this is similar to the pre-IPO transaction. So this is something that would be relevant in terms of how the shares might have been, whether adjusted or there's a split or something. Directors and managers' interest in ordinary shares. This is certainly important to help you to see whether directors or managers have shares in the company. Spoke about the MD&A. There's usually the audited financials. If this is, well, yeah, there's usually audited financials there. And then some other, kind of, I would say the rest of the information may vary depending on the company. But of course, you have application instructions here because it is something for you to apply to should you choose. So that's typically there as well. All right. So these are the areas that are for Atlantic. So remember what I said I would do first. So let's go to the summary of the offer first. Let's do that. So we're going to page 15 first. I think that's what it says. All right, so summary of the key offer information. So they're offering up to 499 million shares. The invitation is for the IPO. Share price was $1 for both the reserve and general pool. The minimum of 1,000 shares is what they have. So there's typically a minimum that they say that you can apply for. Use of proceeds. So the company in this case was going to use the money to pay debt, I believe, right? Then the rest is going to go to their expenses. So every offer comes with a cost, right? They have to pay the broker, they have to pay the JSC, etc. So they're going to use some of the money for that. I think their use of proceeds was to clear debt, if I'm not mistaken. Yeah, so the company will use the net proceeds to repay a portion of the existing indebtedness outlined in section 11. All right. Okay, so they're going to pay the one that was for 300 million in full, while the debt in item 2, 3, and 4 will be repaid by 56 million each, right? So they're telling you what they're going to use the money for here, right? So in their case, they're using the money to pay debts. That was a summary of the offer. So I'm looking at that first, and I'm getting how many shares are being offered, what's the share price, how they're going to use the money. So that's my first check, right? The next thing, I'm looking at the company overview here, which is page 36, section 11. Page 36. So information about the company. So I'm looking here. So the company was founded in 1994. They're a wholesale distributor stocking over 2,400 items, including home improvement supplies, plumbing, tools, building materials, doors, flooring, lawn and garden supplies, paint and adhesive. So this is going to tell me what the company does, what they offer, who they offer it to. The customer base is hardware stores, contractors, developers, and retail customers. So this makes sense why the company would have gotten some interest from investors post Melissa, right? Because the anticipation here is that hardware companies are going to do well. So we saw that movement in the stock last week. All right. So they have over 1,000 repeat customers and 35 employees. Their customers are hardware store contractors, developers, so on and so forth. They're on a steady growth path and is expected to continue to produce increased revenues and profits. In FY 2023, they did 1.4 billion and a net profit of about 147 million. All right. Then they go into who they're the authorized distributors for. So they do generators, they do other things here, and they show some of the brands that they work with. Now, you may not know these brands unless you're kind of in the field. Some of them you may know, some of them you may not. It speaks about the customer base here. It speaks about the product line. It shows you the list of things that they offer here. It shows you the core business, what their kind of supply chain looks like, or the distribution channels here, where they're coming from, things like that, right? So this would be very, very good to understand. Let's speak about the industry here. We spoke about understanding their competitive advantage, how they stand up in terms of the market, etc. So this would go into that very nicely. It speaks about challenges here, and they refer you to the risk factors, speak about their competitive strategies, speak about competitive strengths, benefits of their state-of-the-art ERP, so their enterprise system and the benefits of it. And the reason why I'm not reading kind of line for line, I'm just showing you the shortcut that I would go through for this particular prospectus. So I'm showing you how I read through it. All right. And then you read through the material contracts here, any legal or charges against the company. And they spoke to the fact that they would clear this debt and then 56 million from each of these, which means at this point they're still in debt. They have, I would say, probably about, that's almost $1 billion left in debt, right? So they do have some debt on their books that they'll need to clear, insurance arrangements, tax compliance, etc. So they're showing you the details of the company. So after you read through this, you should understand the company. The next place we're reading is the MD&A. And then from here now, I would have watched their interview on taking stock. The CEO was on the program. I don't remember them doing an investor briefing. And then, of course, I would have made a decision about the company at that point. Now, me personally, after I reviewed the prospectus, watched the interview with taking stock, all of that good stuff, I actually made a decision at the time not to invest in the company. I've never been a shareholder, still not a shareholder, but I would have shared with you just now the process I went through to decide whether or not I should invest in the company or not, right? So I would have seen at the time, so there was one red flag I remember. There was something to that. I don't remember the exact thing now. There was something relating to the share. It was a point of discussion I remember. I don't remember what it's called. Right? There was something about some share allocation or something. That was one. Two, I understand the business model just fine, but the industry to me, I was not sure that it had significant growth potential at the time. Now, certainly, I believe that has changed now. So the industry does have growth potential, certainly post-hurricane. So that is something that I'll probably wait on their next report, see how they're performing, and then probably I'll make a decision from there. But I thought, based on how the last 6 months went pre-Melissa, I would have been right in my assessment, meaning I was looking for at the time, because my portfolio is kind of set for dividend stocks. So personally, I look for growth stocks. Now the stock has grown since 19% in 6 months. But certainly for me, when I think about opportunity cost, at the time of the IPO, I had other opportunities on the table. So this particular one at the time of IPO was not for me. So I'm just kind of explaining my thought process in terms of the things I look for, how I kind of stack them up, and then I make a decision from there, right? So hopefully that little explanation helps. So nothing against the company or anything like that. I want to make that clear, right? But I have a process that I go through, and I'm just sharing that process with you. You, of course, make your own determination as to which company is right for you after you speak with your licensed financial advisor, right? That's the usual thing, right? Anisha says, I was looking at Lumber Depot as well. They had a big spike after Melissa as well. Yeah, so I'll do another video talking about that Lumber, Atlantic, etc. But that's not in the one we're doing today. Let me see. I highlighted these two questions. Let me get back to them now. Do you think there will be a Melissa IPO bubble similar to what happened for COVID, or retail investors are too smart now to fall for the hype? explain the Melissa IPO bubble. Are you meaning what we saw last week? All right, because that, I think every stock that went up last week is already down, right? I think Lumber is down. I think Atlantic is down. Omni is down. Which other one went up last week? I don't remember. So I guess you could, if you're calling it an IPO bubble, now they're not, I think, back below where they were before hurricane, but that's kind of another conversation that I'll have another day, but there's a reason for that, right? So I'll talk about that one another time. Recent movement shows me that retail is getting more and more aware, but I would say there's still a knowledge gap. Well, I mean, there are different sets of investors in the market at all times. If you've been investing for a while, you've been gaining knowledge consistently, you know how to invest, you are definitely smarter. You make different decisions. To me, it's a natural evolution, right? I've been investing for 8 years, about to be 9 years. I make decisions differently than I did 9 years ago. Some of you are new, some of you are not. So it really depends, right? The longer you stay invested, the more intentional you are about learning, then the smarter your investment decisions will be, right? So I think that's kind of par for the course, right? But Shells, let me know about that Melissa IPO bubble. Yeah, let me know about that. All right, so let me see if there are any questions on Instagram here. Allianz is asking, what would be a red flag in the full prospectus if all the former steps passed? Great question. So if I read through the shortcuts, it passes my test. I watch the interview, I'm good. Or I interview the person myself and I'm good. And I'm reading through the prospectus now and I have a red flag. Again, think about those 6 questions. Is the company profitable? Have they shared a clear plan for growth? Do I understand the business model well? Do I think they're going to grow? Are their projections realistic? Those are the things that I'm looking for, right? If I don't think the company will have first, I'm going to classify the company. If I've classified it and I don't think it's going to meet the classification that it has for me, meaning if I see it as a dividend company and I don't think they'll be able to pay a healthy dividend, it's a red flag for me. If it's a growth company and I don't think they'll be able to consistently grow, that's a red flag for me. So things like that. It usually comes down to the assignment that I've made the company and what goes on, from there. All right. So hopefully that helps you. Let me see if there's anything else. Okay, I think we're good there. All right, cool. So let me do a quick call to action again before we close this out. So we're having our portfolio makeover challenge now. If you are investing, you are not sure how to make money, you're not sure how to pick stocks, you're not sure when to buy stocks, I think a $99 investment to help position you to make money investing is well worth it, right? So remember, as a financial coach, as a financial educator, I am teaching you how to do this for yourself. To me, that's invaluable, right? You don't need somebody to tell you what to buy, when to buy it, when to sell it, etc. So we teach you how to do it. So the portfolio makeover challenge is for you to be able to take control of your portfolio, manage it for yourself, have a plan to grow your portfolio. I'll give you one thing out of it that we do that I think is quite interesting, right? So we have this exercise where we talk about identifying stocks that are dead weight, right? It's something that we did in the last session when we shared that concept of what it means for a stock to be dead weight for your portfolio. It was like a light bulb came on for everybody in the challenge. And so persons, even after, I think I saw one of the participants about a month after we did the last one, and he said he removed the dead weight from his portfolio. His portfolio was already starting to look better in the month after we saw each other. And so he was very, very happy that the challenge was able to help him eliminate the dead weight from his portfolio, and now his portfolio is more aligned with what his personal goals were, right? So something like that is what we do in the challenge. It's certainly helpful, and it's something that I think you should check out if you need that help to manage your portfolio. All right, let me see a question here. Are you aware of any or expecting an IPO before the end of the year? Do you want me to answer honestly, Ryan? I know of 3 IPOs, right? Now, I am not legally allowed to say anything. I know of 3. The timeline, I'm not sure of. A person's companies will say things to me all the time, right? So, for example, I spoke to 3 companies before Melissa, right? So before Melissa came, spoke to 3 different CEOs, Jermaine, potentially looking to come to market X time. Of course, I don't know if Melissa has changed any of that, right? So Melissa would have probably pushed it back for some, would have probably accelerated it for others. So do I think so if I'm aware of any, yes, I'm aware of 3 specifically. Do I expect any before the end of the year? I think so, because I think with 7 weeks left before the end of the year, I think we may see one by the end of the year. I think the one that we featured there, I think RPL, theirs was November 2022. Have we seen any in December? I think Image Plus was in December. I don't remember, right? So I would say I'm aware of 3. Do I expect any? Yes. All right. Hopefully that answers your question. I like how you asked that question, by the way, right? Because I couldn't lie, right? So I feel like you were intentional in how you asked that question, sir. All right, so I think that's it, right? So thanks everyone for watching. If you're a brand new investor and you found value in this, be sure to like the video. Don't really ask persons to subscribe much anymore, but if you have not subscribed, please be sure to do that. There is a course that we have. So YouTube is doing courses now. There's a course that we have that you can watch, our Investing for Beginners playlist. We're going to add this video to that list. So if you want to learn how to invest, get the basics going, and you want to do it for free, you can watch those set of videos there. If you're ready to take the next step and you want to have a dedicated process and methodology to teach you how to invest, we have a monthly investment challenge that you can join. It's $50 a month. You can join, be a part of our community. We learn how to invest every month. We help you to be able to make sense of all of this. And of course, we're always doing either courses or classes or challenges, etc., that you can be a part of. So you want to jump in and join our investment community as well. Let me share that barcode here quickly for that one. Just give me a second here for that one. If you want to join our investment community, there's that one, right? So if you want to join our community, scan that barcode, sign up. It's completely free, so you can join our community. And then again, if you want to take that next step in terms of, learning how to invest for yourself, then you can join our monthly programs. All right. All right, everyone. Hopefully you are doing well post Melissa. If you're on our email list, we've done a few check-ins. So if you did not have electricity or internet access and now you do, we've sent a few emails just to check in. Feel free to respond to those emails. I read them directly. If you're also in the community, we formed a hurricane relief group. If anybody needs support or want to ask us for some help or how to get, different things. Of course, a lot of persons are doing that on social media. So you're sure to use those resources as well. But we just want to play our part and be there for our community members. All right. Check out those videos that I mentioned, and I'll see you in the next one.
Learning is the key to successful investing. And who doesn't want to invest in some way?
Here at L.E.A.R.N Grow Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at Learn, Grow, Invest.